For decades, owning a home wasn't just a financial goal, it was the American dream. It meant stability, security, and the belief that if you worked hard enough one day, you'd have a place to truly call your own. A teacher could do it, a nurse could do it, an engineer could do it. Ordinary jobs were once enough to build an extraordinary future. But somewhere along the way, something changed. The same careers, the same effort, somehow weren't enough anymore. Today, millions of Americans are chasing the exact same dream, yet every year, that dream seems to move just a little farther away. And here's the strange part. It isn't because people suddenly stopped working hard. In fact, many are working more than ever before. So if Americans are earning paychecks, saving money, and doing everything they were told to do, why does buying a home feel almost impossible? The answer isn't hidden inside a single headline. It's buried beneath years of rising prices, higher borrowing costs, and a housing market that quietly changed the rules. And once you see those rules, you'll never look at the housing market the same way again. Because this isn't just a story about expensive houses. It's a story about why an entire generation feels like it's running forward, without ever getting closer to the finish line. So what actually happened? How did one of the most achievable milestones in American life become one of its biggest financial challenges? To answer that, we have to go back to where the numbers first started changing. Let's start with the obvious explanation. Most people assume homes became unaffordable because prices simply exploded. And they're right. But that's only half the story. Since the pandemic, home prices in many parts of America have risen far faster than wages. In some cities, the gap isn't just noticeable, it's life-changing. Imagine getting a small raise at work, while the house you wanted suddenly costs tens of thousands of dollars more. That's exactly what happened to millions of families. But here's the question that almost nobody asks. If prices went up, who was still buying all these homes? Surprisingly, it wasn't just first-time buyers competing with each other. Investors, large companies, and cash buyers entered the market at the same time, making competition even tougher. Now imagine you're trying to buy your very first home, but you're bidding against someone who can pay the full amount in cash. Before you've even signed the paperwork, you've already lost. And even if you somehow won that bidding war, another obstacle was waiting for you. Mortgage rates didn't stay where they were. As interest rates climbed, the monthly payment on the exact same house became dramatically more expensive, even without the price changing. That's what makes this crisis so unusual. People weren't just paying more for homes. They were paying more to borrow the money needed to buy them. And when rising home prices collide with rising borrowing costs, something unexpected happens. The dream doesn't disappear overnight. It slowly slips out of reach. But the housing market had one more problem that almost nobody was talking about. If home prices were rising because demand was strong, then there's an obvious question. Why didn't America simply build more homes? It sounds like a simple solution. More people need houses. So build more houses. But that's exactly where the real problem begins. For years, America hasn't built enough homes to keep up with the number of people who need them. The shortage didn't happen overnight. It quietly grew, year after year. Imagine a game of musical chairs. Every year, more players enter the room, but almost no new chairs are added. Eventually, someone is always left standing. That's exactly what the housing market has become. More buyers, fewer available homes, and competition that gets tougher every single year. And when something becomes scarce, prices don't just rise, they accelerate. The fewer choices people have, the more they're willing, or forced, to pay. But why weren't enough homes being built in the first place? Was it a lack of land, a lack of workers, or was something much bigger happening behind the scenes? The answer is complicated. Higher construction costs, expensive materials, labor shortages, and years of local building restrictions all pushed new housing further out of reach. Builders weren't simply refusing to build. In many cases, building affordable homes became less profitable and sometimes financially impossible. So while millions of families searched for homes, the supply kept falling behind. And just when it seemed things couldn't get any harder, borrowing money became dramatically more expensive. That's where this story takes another turn. Let's say you finally find the perfect house. You've saved for years, your credit score is solid, and you're ready to make an offer. Then, almost overnight, everything changes. Not because the house became bigger, not because the neighborhood improved, but because the cost of borrowing the money suddenly became much more expensive. That's what a higher mortgage rate really does. It doesn't just increase your payment, it quietly changes what you can actually afford. Imagine two families buying the exact same house. One buys when rates are low, the other buys after rates rise. They're purchasing the same property, but one family ends up paying hundreds of dollars more every single month. Over the life of a mortgage, that difference can add up to tens or even hundreds of thousands of dollars. Not because the house changed, but because the loan did. Suddenly, families who qualified for a home last year no longer qualify today. Their income didn't shrink, but their buying power did. And here's where things become even stranger. Higher interest rates were meant to cool the housing market, but in many places, home prices didn't fall enough to make up for the higher borrowing costs. So buyers found themselves trapped between two impossible choices. Keep renting while prices stay high, or buy now and lock in a much higher monthly payment. That's why so many people feel stuck. They're not waiting because they don't want a home. They're waiting because every financial path seems to come with a different kind of risk. But while first-time buyers were struggling to get in, another group had a completely different advantage. And that advantage changed the housing market in ways most people never noticed. Here's something many first-time buyers don't realize. When you walk into a bidding war, you aren't always competing against another family. Sometimes you're competing against someone who can make an all-cash offer, skip financing, and close the deal in just a few days. To a seller, that kind of offer is often simpler and less risky. And when multiple offers arrive at once, speed and certainty can matter just as much as price. That doesn't mean every cash buyer is an investor. Some are families, some are retirees. But it does mean not every buyer enters the market with the same advantages. Now imagine trying to save for a down payment while rent, groceries, insurance, and everyday expenses keep getting more expensive. Every extra dollar saved takes longer than it used to. And while you're saving, home prices may continue to move. Suddenly, the finish line doesn't stay in one place. It keeps moving farther ahead. That's why so many people describe the housing market as feeling impossible. It's not usually one obstacle. It's several obstacles stacking on top of each other. Higher prices, higher borrowing costs, limited supply, tougher competition. None of these challenges exist in isolation, and together they reshape the entire buying experience. The result isn't just fewer home purchases, it's delayed families, postponed plans, longer commutes, and a growing number of people wondering if they'll ever be able to buy at all. But here's the part that often gets overlooked. This isn't only changing today's housing market, it's changing tomorrow's economy as well. And that's where the story becomes even bigger. At first, this sounds like a problem for home buyers, but when millions of people can't afford a home, the effects spread far beyond the housing market. Think about it. When families delay buying a home, they often delay everything that comes with it. Moving, renovating, starting a family, or investing in their community. That slowdown ripples through the economy. Fewer home purchases can mean less demand for furniture, appliances, construction, and countless local businesses that depend on new homeowners. Renting for longer isn't necessarily a bad choice. For many people, it's the smartest financial decision. The challenge is when renting isn't a choice anymore, but the only option left. Over time, that changes how people think about the future. Saving feels harder. Planning becomes uncertain. And goals that once seemed achievable start feeling permanently out of reach. Younger generations aren't asking for luxury homes. Many are simply asking for the same opportunity their parents or grandparents had, a realistic chance to buy a modest place of their own. And that's why this conversation matters. Because housing isn't just about buildings. It's about stability, opportunity, and whether hard work still creates the future people expect. Every generation faces different economic challenges, but the housing market has become one of the clearest examples of how quickly financial realities can change. None of this means home ownership is impossible. It means the path has become more complicated, more competitive, and far more expensive than many people anticipated. So if this isn't a problem with one simple cause, can there really be one simple solution? The answer isn't as straightforward as many headlines make it seem, and that's where we need to look next. So, is there a solution? The honest answer is yes, but it isn't quick, and it certainly isn't simple. Building more homes can help, but new neighborhoods, roads, utilities, permits, and construction all take time. Housing shortages can't be solved overnight. Lower mortgage rates could also improve affordability, but if rates fall while supply remains limited, home prices could rise again as more buyers rush back into the market. In other words, solving one problem without solving the others often creates a brand new challenge. That's why housing is so difficult to fix. The goal isn't just cheaper homes, it's a healthier market, where families can realistically buy, builders can realistically build, and communities can continue to grow. Throughout American history, the housing market has gone through booms, slowdowns, and recoveries. The market changes, but the reasons behind those changes matter far more than the headlines. That's why understanding the system is more valuable than trying to predict next month's prices. Knowledge helps people make better long-term decisions, even when the market feels uncertain. Because once you understand what's really driving affordability, supply, borrowing costs, wages, and competition, you stop reacting to every headline and start seeing the bigger picture. The housing market isn't just a collection of numbers. Behind every statistic is someone deciding whether to rent, buy, move, or put their plans on hold for another year. And perhaps that's the biggest lesson of all. This story isn't really about houses. It's about opportunity, and whether the path to building a stable future still feels within reach. But before we finish, there's one important question worth asking. Maybe the American dream hasn't disappeared. Maybe it's simply become more expensive, more competitive, and far more complicated than previous generations ever imagined. But understanding why that happened matters. Because once you understand the forces behind the housing market, fear slowly turns into perspective. Markets change, interest rates rise and fall, new homes get built, policies evolve, but informed decisions almost always outlast temporary headlines. That's why the biggest financial advantage isn't perfect timing. It's understanding the system before everyone else does. Because whether you're buying your first home, renting, or simply trying to make sense of today's economy, these forces affect all of us in one way or another. And housing is only one piece of a much larger puzzle. The same economic pressures reshaping the housing market are quietly changing the way Americans borrow, spend, save, and build wealth. That's why understanding personal finance today isn't just about budgets or investments anymore. It's about recognizing how connected every financial decision has become. So the next time someone says, "People just need to work harder to buy a house," you'll know the story is far more complex than a single sentence can explain. And if the housing market feels difficult today, wait until you see what's happening in another corner of American finance, one that millions of people depend on every single day, yet few truly understand. In our next documentary, we'll uncover the hidden costs behind America's auto loan crisis, why monthly car payments keep climbing, how longer loan terms are changing household finances, and what it all reveals about the future of debt in America. If you enjoy clear, story-driven explanations of the financial forces shaping everyday life, consider subscribing to Finowina. Thanks for watching, and I'll see you in the next one.